Hi guys, it's Dr. Ron Miller here of cashbasedphysicaltherapy.org, and we are going over an income statement. So this is my intro to business kind of finance startup series, and I wanted to go over what an income statement is. So we went up with startup capital already, and then we also went over a balance sheet, your initial one and your 1 year one. So let's look at an example of an income statement. And pretty much your income statement is just telling you how good your business is doing. It's going to tell you profitability. It's going to look at revenue versus expenses, and if you are generating any profit. Okay, so I outlined an example. These are similar to my numbers. I just made everything simple, so I don't have to do any of the math. Just kept it even and pretty much basic. So I just wanted you guys to get the key here, or the fundamentals of looking at an income statement. So we have year 1, year 2, and year 3. You should be setting year 1 goals and year 3 goals when you're starting up your clinic and making sure that you're reaching those goals too. So that's a whole nother lecture. But right here we're going to have gross revenue. This is the accounts receivable. This is how much money you're bringing in a year. You have your expenses. Now I dummied this list down drastically just because of the space, but your expenses can be anything from marketing and advertising to insurance to fundraising to charitable donations. It could be expenses with equipment, bills, telephone, vehicle, everything. So these are all expenses. I just dummied them down for us. And then after that you have a pre-tax profit, or an EBIT, or the this is the pre-tax amount. Okay, so yes, you're going to get taxed on the amount of salary that you pay yourself, and you're going to get taxed on profits. Okay, so there's pre-tax profit and post-tax profit. So, and then at the very end, you're going to have net profit or net income at the very, very bottom. Taxes, depending on you and your CPA and how you structure everything, it's going to run between 20 and 40%. Okay, so let's go over in a year 1 example. We'll stay with the same numbers initially. We generated $70,000 in sales. Your expenses, you're in a small 1-room place just leasing out for 1 year, so your expenses are going to be $20,000. You're going to pay yourself a salary of $40,000. You spent $4,000 on equipment, anything, name it. Okay, so your total expenses are $64,000. So your pre-tax profit, or your EBIT, is $6,000, which if you did this, that would be great. That would be awesome. Again, remember, most businesses finish up in the red and lose money in that first year. But if you could have a pre-tax profit of $6,000, pay your taxes, end up with a net profit of $3,500. That would be a great year for your first year. If you broke even or pretty much made profit, that's phenomenal. And that's why I designed my 101 systems. This is going to expedite this process, so you can really know what works and generate great revenue in a cash-based clinic. So let's go into year 2. Say you went through year 1 and now you outgrew that 1-room space. Okay, so in the middle of year 2 you actually moved into a bigger location, maybe with 1 or 2 treatment rooms plus a reception room. So you expanded your space, but you increased your expenses. Okay, now if you do this correctly, you should be able to continue to increase your revenue. You should easily be able to be above $10,000 a monthly revenue. You learn how to market. Your word-of-mouth marketing is going. Your marketing strategies are proven to work. You're developing a great reputation. You should easily be able to hit $150,000 in revenue. Okay, now our expenses went up because we moved into a bigger location. Your utility bill, your internet, your phone, your everything's going to go. We bought some more equipment. We did, we expanded a little bit, so our expenses did go up this year. You started to pay yourself more. Maybe that second year you paid yourself $70,000 a year. Okay, so our expenses went up, and some additional, insurance, etc. Anyway, the point is that if you move into a bigger location, then yes, that's fine. Your expenses went up. Our expenses went up to $140,000. Your biggest expense will always be your own salary, so you have to kind of balance it out. with this is how much is the best amount to pay yourself and still break even. But we paid ourselves more, we paid ourselves 70. Our expenses went up a lot because we expanded into a new building. If you would have stayed in that same small space, maybe you would have been able to pay yourself either a lot more or generate a lot more profit here. But this is, this is what Amazon's doing. Amazon's not generating profit now, but they're reinvesting profits into the big vision. So our big vision wasn't to stay in that one room. We want to expand to hire some other therapists. So during year 2, you can possibly expand, move into a bigger location, and yes, your expenses will go up with that. So we are left with this pre-tax profit of $10,000 in year 2. We pay our taxes, 40%. You're left with $6,000 of profit. Now, yes, we increased our sales drastically, but we only had a little bit of profit. In this example, that's okay because you expanded and you have your big vision, so you reinvested your profits into getting a TV, making a nicer facility, having a brick and mortar location. Anything can happen, but the point is that if you do this right, you can expand and grow into a bigger area and be able to increase your expenses and your salary and still make profit still, okay? Now we go into year 3. We're really full force with the marketing. It's working great. Our reputation's phenomenal. We're getting a lot of people. We didn't increase our sales that much, but maybe towards the end of year 3, maybe you hire a second therapist, or you bring on a part-time therapist, okay, to start. But you've already expanded into that new building. You have extra space to be able to grow, okay. Now you hit your $180,000 in revenue. And at this point, you're probably hiring a part-time therapist. If not, you are definitely hiring a second therapist at some point during this time, or you'll be overbooked. So this is where it gets good. So our expenses, our salaries were $100,000. We didn't have to buy so much equipment this year, so we decreased our equipment expense, and our other expenses stayed at $60,000. Okay. And we paid ourselves some more again, and some of this may be going to the second therapist too, but we have $165,000 of total expenses. And then we're left with $15,000 of pre-tax profit. And then from there we pay our taxes, 40%, we're left with $9,000 of profit. Again, this is a generalized income statement over a 3-year period. Where the art of business comes in is when you start generating more revenue. This is the key here. You have to start generating more revenue and growing. And then to get really good at it, you have to decrease your expenses as much as possible. So where the art of really running a business and learning how to run a business efficiently and doing it well is your strategies are going to increase your revenue greatly, and you're going to decrease your expenses as much as possible. And then it's up to you to decide on how much money you want to increase your own salary, because if you could be efficient and run your business in your new location at like $30,000 or $35,000, guess who's going to get the rest of that money? Either you can pay yourself more, or you can let it come down here where you're generating an extra, actually it would go here, you're in the $25,000 of profit, and you pay your taxes and you're left with whatever, 12. So this is where the art of business and where you have to learn how to run a business good comes in, because your strategy should be increasing your revenue year to year to year. And where you have to get good at is can you run your business efficient and with the least expenses possible? And that will give you the opportunity to pay yourself more or be able to generate more profits at the end. See, the difference between a cash-based practice versus an insurance-based practice is the insurance clinics have increased overhead, so they generate very low profit. So what they have to do is they have to open up multiple locations, and numbers, having more clinics is the key of how they generate more and more profit. What we're doing is we're doing it better and more efficiently with better quality care. We can generate the numbers this way if you create true value, and in a cash-based clinic, you're functioning and running your business at such low overhead that you're going to be allowed to pay yourself a lot more, or you're going to generate much more profit. will never be a factory, but if you run this model efficiently, you may be able to open up a couple more locations and hire other therapists and growing your business that way. But anyway, I just wanted to go over a quick example. This is a generalized income statement. I have more specific stuff in Business 101 with the pro forma packet, but this is just going over general three-year example of doing gross revenue versus expenses versus pre-tax profit and your net profit and your net income. So please let me know if you have any questions about this. Join the 101 forum on Facebook. Subscribe to the YouTube channel. I'm really trying to put this and take this to the next level and really help others set up their cash-based clinics. So thank you for tuning in. Hope you learned something, and until next time.